Thank you, everybody. I hope I'm audible right now. Yes. It's just to ask that everybody's awake right now and not sleeping. And going by Mukesh's presentation, I think it was wonderful. It was great, and the remaining speakers as well. So, allow me to introduce myself. I'm Pratik Shah. I head the product department at SMEcorner, which is in the fintech space. And so, over a period of time, at least for decades of experience, I have been in product management. I have worked with various companies like Accenture, HDFC Bank, Motilal Oswal Financial Services, and a lot of companies on and on. So I don't have a great slide as how Mukesh had about myself, but I'm yet learning, yet growing this journey, and this is a great space to be in, especially fintech and the AI space that we talk about. Okay, so I think most of us have covered what fintech is, what AI is. So I'm going to do something similar. I'm going to also talk about basics of what fintech is. So this is a broader agenda. Just going to run you through the current state of fintech. What are the key segments, the drivers? Why do we need AI in fintech? First of all, being a product guy, I always keep on asking why. So that's what I always follow. Followed by there are two interesting use cases. I think most of you have covered the use cases and also heard about it, but I want to speak a bit more about the use cases. Right? Okay, going to the fintech state currently, right? So there are these five. Let's gather some data. Since we are talking about data, let's do some guesstimation work out here. So there are these five parameters. I would like to ask you all, starting from what would be the number of Indian fintechs currently? Just a rough amount. Anybody just a rough guess?
1,000.
Okay, that's one guess. Another. I'm bidding right now. More guesses.
3,000.
Okay. Okay, that's a good number. Followed by what could be our global rank, okay, Indian global rank that we have. Second. Okay. What would be the CAGR year-on-year percentage growth that Indian fintech ecosystem has seen over the past few years? Any guesses?
400.
Okay, close enough. And let's come to the last one, the estimated market size by 2025. Anybody? There are no incentives, but yeah, anybody? 200 billion. Okay, more. Okay, I'll just cut to the chase. These are the numbers. So we have more than 6,500 fintechs right now in India. Market size $1 trillion. I had to Google how many zeros are there in trillion. Okay. By the way, 12. We got more than $22 billion of funding in the Indian fintech ecosystem space, and currently our rank is the third across the global space. Top two are US and UK, so we are there. And of course, this is a growing space. We are getting there. I think soon will be number one as well, right? So the whole gamut, it all started basically in 2014, 2015. That's when the entire fintech ecosystem took place. Of course, there are a lot of fintech companies back then. To dive deeper into it, these are the key segments that I've highlighted out here. These are the broader spectrum of the fintech space and what would be dive deeper into it, which is digital payments, lending tech, that's my field because I'm working for a lending company. There is insurtech, there's neobanking, there's wealth tech. So, if I may ask, what is the famous fintech app that you use currently on a daily basis? Google Pay, I have Google Pay next. Paytm, Phone Pay, yeah. So these are the apps that everybody's aware of. Even a local kirana store will say, sir, 10 rupees, just give me, there's a QR code, I'll scan करके भेज दो, right? So this is the power of fintech that millions of Indians, millions of users have recognized fintech as, and from there on, it's like a hook. All the companies are growing in that space, right? So majority of the key drivers. So there are a lot of reasons why this space has grown from 2014 to few fintechs to 2022, where there are thousands and thousands of fintechs. First, what I would think of is Geo. All thanks to Geo and the internet penetration that they've given to India. By 2016, when they soft launched their product, everybody started getting the Geo SIM and started using internet, right? Without internet, it's difficult to work in the fintech space. Of course, there are offline modes as well, but that's where Geo played a very huge role in gathering all the fintech companies. Moving on, now this is the most important driver is NPCI. We're hearing Google Pay, Phone Pay, Paytm. The underlying the foundation basic is NPCI, and that's how the UPI came into picture. Now, this platform is so powerful. It is right now getting globally recognized by other countries like Singapore, even European regions, Hong Kong, Malaysia. That's where it's getting adopted also. So thanks to NPCI, and this is one of the most successful and global fintech that India has created ever. And of course, there will be more fintechs coming up in the future. So this company has played a huge role where people are knowing payments, and because of that, fintech is growing with them, right? Any guesses what November 2016 was? Perfect. Yeah. So I had a funny incident where I got for a movie that night, and I had to pay. I wanted a change of 500. That's the time when someone told me, "Sir, आपका पैसा valid नहीं है." What happened suddenly? And that's why overnight the when it got revoked and it got changed and demonetized. Now before that, what the importance of that was where you're a cash economy, you're cash rich. Right now also we are cash rich. We can never be cashless. But apart from cash, a lot of digital presence was taken into picture, and all the digital transactions happened post November 2016, right? And last, we're going to talk about is emerging tech. So when I talk about emerging technologies, there is, I think everybody's covered it. There is AI, there is blockchain, there is cloud security, there's quantum computing. There are a lot of emerging technologies. And what fintech is encompassing is predominantly AI, all the open banking APIs, blockchain as an underlying layer, and entire cloud security domain. So this is what's helping fintech space to emerge from what it is back in 2015. So if you can see, AI has become a very strong, technology or foundation for fintech to grow, right? Okay, moving on. So since people are talking about why, we are not talking about why AI and fintech, right? So I want to understand what do you think? I feel there are three most important reasons why AI should be there in fintech and should be predominantly used more and more. So any guesses what these three pillars could be? Why do I want to use AI in fintech? Why do users want it? Right? Any guesses for the first one? Okay, yeah, that's close. Second one?
Recommendation.
Okay. And third, I think everybody suggested easy to use. So these are three foundations of any technology, especially AI. My data, my hard-earned money, or my investments are relying on machines. So first of all, we need to trust them for it to grow and for it to manage your entire wealth and investments and money, right? All your transactions are happening through a lot of cloud-based security devices, a lot of recommendations, or a lot of personalized recommendations that you get is because of AI. Now, if you just want to invest in some stocks, there are a lot of robo advisories also available. So you really need to trust them as a first factor. That's how you can rely on them and start using them, right? And last, they make it very easy, as simple as opening an account and just scanning my PAN. It just detects through image recognition and it takes my data and it verifies whether I'm a genuine user or not. It's that we understand the importance of it. Right? Okay, moving on. I'll be focusing on a couple of interesting use cases, and I'm sure everybody must have heard about it. One of the most key use case I could think about is fraud detection payments. Since everybody's aware of payments in terms of Google Pay, Phone Pay, Paytm, people have done it on a day-to-day basis. What happens in the back, and how AI is helping your payments, keeping it secure and avoiding the fraudulent activity, right? So imagine a situation where I'm a payment gateway, right? And I get millions of transactions on a daily basis. How does a machine identify, or how does the bot identify that which one is fraudulent and which one is genuine? So I don't want any false positives, I don't want any false negatives. What happens is to identify that, first you need to train your engine in such a way, at least you achieve some sort of accuracy out of it. Right? Now, as a customer, as a person, what could be my transaction data? Right? So I'll just delve deeper into it. Okay, it could be my customer ID, it could be my identity like email, PAN, phone. It could be possibly my reference number, from where I'm transacting, using which device, using which say banking, or is it UPI, is it credit card. So there are at least 50 to 60 parameters of a customer itself when the transaction takes place. Okay, so this entire gamut acts as an input to your engine. Okay, that's all the raw data, the structured data, all converted into the input for the AI engine. Right. Next, what you do is you segregate all the data that's collected and probably extract features out of it and assign key signals that these are the key parameters I should look into, that this could be a potential fraud if there's a deviation in it. For example, if I consider location as a feature, till 5 years I've always transacted in very similar locations. Suddenly I get a transaction from, let's say, Afghanistan, right? Now that could be a deviation. That is one small example. I could assign hundreds of signals to each transaction. And whenever there is a deviation from my past data, the engine automatically understands my behavior, the pattern of which what I've transacted, and identifies, okay, this could be a potential fraudulent scenario, right? Okay, so once you've identified your key signals, once you have all the data aligned, what you do is you start creating algorithms around it. So in data science, there are a lot of models. I'm sure you're aware in terms of regression models, classification, be it supervised, unsupervised. So a lot of models are there to probably create your own algorithm and also train them. Now this is the most important part, where people feel that we have the data, we have the key signals, let's just deploy it after a month. No, it's like saying you go to the gym, I want six packs in 1 month. That doesn't work out. It's a slow process where you train yourself, you control your diet, everything. Similarly in AI, you understand what you're capturing, what you have to discard. That's also very important. And slowly, it's a practice of months wherein you build an algorithm and it sustains an accuracy of say 90. It doesn't start at 90%, it goes from 60, 70 to ultimately 90%. Right? So this is very important phase, and it's very important to spend most of the time on creating and deploying algorithms. So once this is finalized, that's where a model is created, and this is where the actual fraud detection takes place. Now, imagine a situation where someone has swiped a credit card on my behalf in a very remote location of US. Okay, and I've never done international transaction on my credit card. So that is straight up, it will decline, and then itself will say that this is a fraudulent, potential fraudulent transaction, right? So this is the overall process. This is just 50,000 feet above the ground, where you can understand how fraud detection will work in this space, right? Um, okay, so moving on to the next. I think this is one of my favorite because I am from the lending space. So I'll just give an example before explaining the lending process. So let's assume you are a simple restaurant owner. You run a business. and you sell Indian food. Okay. As a restaurant owner, I want to expand and grow my business, and I want a loan. Right? So I don't go to a bank, I go to an NBFC, whatever. I can go to a number of companies to get a loan. Now, when I approach them, okay, they won't ask me one simple question. Say, just give me your credit score. They'll ask me tons of data. One restaurant owner can have at least 200 to 200 plus data points to capture and then analyze. A score is generated. Right? So let's assume my personal details, my financial details, my GST filings, okay, my entire spending history, my bank statements, everything is collected by the lending companies and it is analyzed. So that's the first step that we do to capture data. Okay, without that, of course, the model won't work correctly, right? So what happens next is once I've gathered all the data, this is there are 250 parameters for one person applying to us, right? And there are lakhs of customers who apply for a loan. What you do is segregate. You segregate into your personal details or your demographic details, where the person stay, whom is the person married to, how much property does the person own, how much financial details the person is shared. A lot of details are captured to segregate that data into various segments, right? That's what a structured analysis comes into picture, where all the segregation is done on the basis of the data collected by all the peers. Okay. So what matters really is giving money is not a problem. Getting it back is a major problem, right? You assign weightage to each parameters. Which parameters are really important that will determine that the person will pay me back. Okay. Now, if I'm just taking one, let's say parameter, the location. Okay, that would be a good weight, not that a huge weight, but my financial details. I have a regular income, less number of loans, not much EMI, and a healthy bank statement, and that is a high weightage parameter. Right? So that's how you assign weight to each parameter. You have to sit with an expert and understand how weightage should be done. Once that is done, you move to testing an algorithm and building a model, and again validating the accuracy. Right? So AI and humans work hand in hand. First of all, you need to build that model first, and that's what humans are for. You build it, and you build it for the humans only. Then, right? To make things easy, you personalize it, and you trust it. So these are the core three pillars, and this is very important to understand that. Since data is the new oil, you capture so many data points from every field, especially in the fintech space. So it's very important to understand what you capture, segregate it, and then finally build a model out of it. Right. So these are a broader use case of AI, and I would like to probably end my presentation on this point. Thank you.